Hey, what's up, everybody? This is Omar from the Bullish Bears team. I want to do a quick video, just talk about some Friday's plays, talk about some of the chart patterns. There were a lot of breakout opportunities, and I just wanted to kind of review with you like breakouts and breakdowns, and just talk a little bit in general about momentum trading. I'll try to keep this short and sweet. Um, so basically, Friday we had some big movers. The first one I want to talk about is Jivo. So right now I'm in my TD Ameritrade account. I have two charts here. I have the 1 minute and the 5 minute chart. So if you see right here, the 1 minute and the 5 minute. And the reason why I left the 5 minute with no indicators is just because I just want you to have a clear vision of like the pattern, so you can understand how patterns work. All right. So what happens is one of the things that I can't stress enough is that if you're gonna trade momentum stocks, meaning you're gonna be a day trader and just looking to buy stocks or short stocks, you really want to trade like the first hour or the last hour, like really from like 9:30 to about 11 to like 11, maybe 11:30, and then usually between like through 2 to 4, but generally between 3 and 4. That's where a lot of activity picks up, and that's when you see the stocks tend to move. So really, all you need to do is trade the first hour, and I don't suggest to overtrade. Trade one, maybe two stocks. Obviously, if you're under the PDT rule, you're only gonna be able to make 3 trades per 5 business days if you buy and sell a stock on the same day. So you just want to be very calculated when you make your trades. This first trade I want to talk about, Jivo. This is one of the chart patterns that I talk about in my momentum trading for beginners. You have two types of trades. One that when a stock just completely like rips up and then just sells off. That's what happened with Jivo here. So when the market opened in at about 9:32, this opened at 361 and hit a low of 320, and then it sort of moved, and and what caused it to rip? Hold on, circuit breaker. I'm not sure what really caused this to move, to be quite honest with you. But what happened was, if you noticed here, right, once the market opened, once it broke this candle right here, it made its new high of day, and traders see this, and what they do is they know that Jivo is a stock that's had a habit of gapping previously. And what you do is, you can look at the yearly chart. So like if I came here and I put 1 year, I can get a sense of like when the stock ripped. So for example, on June 17, 2016, this stock went from 38 cents all the way to a high of 69 cents in one day, and that was based on news. It had another big move on July, August 3rd. I'm sorry, it went from 54 cents to 67 cents. It's done this before too. We went from here in September 6th, went from 58 to a high. It didn't move much here. Actually, which day did it move? But if you look at the history, it's had some days where it moved, like from here it went from 38 to a high of 50 cents. So this stock has a habit of moving up and down, and other traders know that, so they jump in. So on this day, look what happened. You get two types of patterns. This is the one of the types of patterns I talk about, where stock just rips up like an arrow and sells completely off. So what happens is, if you happen to catch this in the as it was moving, your entry would have been once it broke the day's high. So right here, once it broke this candle, it would have broke the day's high. And just to make it really simple to see here, actually pre-market, this was the actual high, because you gotta account for pre-market as well. And this was the confirmation to get in 378. So if you're watching this for whatever reason, let's assume you were watching this, and this is the 5 minute chart, by the way. You always draw trend lines, because the trend's your friend, and the trend gives you a sense of what the stock is gonna do. So what I usually do is, like, if I see if I have a stock that I'm looking for, or if I'm watching pre-market because I'm seeing where it's gonna do, I'm looking to see, okay, where is its support and resistance. And you look at pre-market as well. And if you look at the pre-market, this hit a high of 378 in pre-market. So once it broke that, that's your confirmation for entry. On the 1 minute chart, you can do the same thing. So here's you're looking pre-market. Here's the high of day at this moment, right? And what you do is you just you go to drawings, or you right click, you put trend, and you just put your little trend, and you just roll across the screen. And that way you know that this is resistance, and you need to break this in order for you to get in. Now, if you're looking at the 5 minute chart, you're only going to see two candles. But if you're looking at the 1 minute chart, you're gonna see about 8, 9 candles. And look what happened at 9:32. It was trading at a low of 320. It closed at 320, but by 9:43, this thing was trading at 535. Did an incredible move. What you don't want to do, guys, is chase. So when you see stocks that are ripping with no pullbacks like this, these are one of the chart patterns that I told you about. Okay, if you want to make sure that you're getting in as close to resistance as possible. So if the stock is all the way up here, like at 506, I mean it's gapped up, I would be afraid to trade this. What I rather do, and this is what I'm becoming more of, is a shorter. So I'm waiting for it to sell off. And once the stock actually hit its high, it started that reversal. And if you notice, the MACD rolled over. If you notice that it was very bullish, it actually started pre-market. The bullish activity started pre-market, and then kind of like it rolled over this way, and then it rolled up. And you're gonna see that it spiked really, really quickly. But the RSI is hot, so you know that this is gonna pull back. It's not gonna just spike up forever. And what I usually do is one of the things that I said I do is I draw a resistance line. What I also do is when I see a stock trending one way or another, I put a trend line. And that way you get a sense of the direction of the stock. So I have my trend here, right? So let's say I'm watching this. This is the high of day, right? I'm looking at the trend, and you have to kind of set the trend as close to the candles as possible so you get a sense of what the stock is doing. So you see how it starts here, and I'm just riding it all the way up. And what you're doing is you're looking to see that the stock stays along the trend. Once it breaks the trend, that means that there's going to be either a pullback or reversal. When a stock goes from $3 to $5 in 20 minutes, it's not gonna, more than likely, you're not gonna get a pullback. You're just gonna get a quick sell-off, and that's what happened here. So me, because I'm short biased, I would have shorted into this sell-off, and boy, did it sell off, right? It went from 535 all the way down to where to the reversal, and you can do the trend actually on the other way down. So if you're seeing it trending the other way, you take the candle, I'm sorry, you make your trend line and you just follow your trend all the way back down. Okay, so if you look at it here, you just kind of go here, and you know that it's gonna follow a trend, and you're gonna notice. Actually, I did the trend wrong. This is, let me delete the trend. Actually, it's supposed to be as close to this as possible, so it's supposed to be real tight. I don't think I would have done it this way. It probably would have been like this, because in hindsight now I can see it, but had I done this, I would have been like this, and you get a sense of the direction of the stock. And once it breaks the trend, you kind of get a sense of the reversal or whatever. But what did I talk about in my momentum trading? I talked about dip buys as well. There are other traders who, when a stock sells off like this, you're going to get what's called a gap fill or a dip buy. So you notice at 9:43, this stock would hit its high, and then it just sold off, right? Everybody's just taking their profit. And by like 10:28, it found its support level, right? So you see that's right, and you see that the candle it hit its low here, and then it started gapping upward, right? So I would just put like a little line here just to know, okay, this is support. And what it did, it bounced. So people buy these bounces. And I actually was at work, and I saw when it sold off around here, and I wanted to place a buy order, but I couldn't because I had just had too many eyes around me, too much was going on. But look what happened once it sold off. When you see stocks that sell off this way, people buy these, and they buy the gap fill. So at around 10:28, this was trading at around what was it? Closed at 330. I'm sorry, this is where it started. The reversal started. It was a low at 323, and it closed at 330, and then it started bouncing. It went all the way from 330 all the way back up to a little over $4, and then it sold off. And why did it sell off at around $4? That's not mad. Well, a couple of reasons. Well, it touched VWAP at $4, but that's a resistance point. But really, it's a whole number, and people sell off around whole numbers. Whole numbers are psychological barriers for people. So people took their profit. So the people that bought down here, right, when they did that bounce, they sold. They took their profit here, and then it went from 398 all the way down to a low of 374. Okay. So when you see a stock, let's say you miss a move, you're like, crap, I missed a move. If you have the ability to short, you can short into this, and you could have made a lot of money shorting. But let's say you don't have a margin account, so you can't short. What you could do is whenever you see a stock like this just selling off really fast, you wait for it to find its support. And once it finds its support, you can put a buy order using the support as your stop limit and just buy the bounce. And you know, this thing bounced really nicely. It got all the way up to close to $4. A lot of times you might not get that. You may get a 20-cent bounce, 10-cent bounce. I'm not greedy. I'll take like 10, 15 cents and then just take my, sell, and take my money, But some people, they try to get maximum profitability. I don't agree in doing that when it comes to stock trading because you don't know when a reversal is going to happen and, you can wind up losing money. So if you make 10% on your money, that's great. 20% on your money is fantastic. Don't be greedy. All right. So that's what I wanted to talk about. And if you look at it clearly, here's the breakout. So people buy a lot of these breakouts. All right. And this was a stock that finished over 2,000%. I mean, insane. That's why I love penny stocks. Apple's not gonna rip for over 2,000% gain. It just doesn't happen. All right. So a couple other stocks. ETRM was another monster that moved, right? And this is a low float stock with news. And what happens is when you got a low float stock with news, sometimes they run for a couple of days before they completely, like run out of steam. So I wouldn't be surprised if Monday this thing rips for one more day. But who knows, right? You'll know when the market opens. And look, this thing started ripping pre-market. So this was at 425 pre-market and it ripped, right? It ripped, and you see it's following these bull flag patterns, right? It's going up, it's going across, it's going up, it's going across. And this is the 9 EMA, this is the 20 EMA, this is VWAP. These are my little indicators. Right here, at this point, this is high of day in pre-market, right? So you're seeing it pull back, and then it kind of pulls back, and once it breaks this, that's the high that people just started buying, and they just drove this thing up. And this is all happening pre-market, going from $5, $5.35, all the way up to $7, which is insane. And then it pulls back because people are taking their profit, and it bounces. Look what happens. It bounces right to the 9 EMA, and then it pushes. All right, so these are all bullish signs. All right, there's another. And it just kind of rides, and then it sort of consolidates, and then it starts ripping again at the market open, and then it's sold off. The reason why it's sold off is because the sell-off is all these people here who bought took their profit, all right? And when you see a stock usually rip pre-market, a lot of times it will be exhausted. It will not rip the market open, but this stock just continues to it's incredible. It just continues to go and go and go. So what happened? The stock rips, right? It kind of consolidates, and then it has a sell-off. It breaks down. So, and if you notice, right, you gotta look for where support is, right? And this is sort of where support is at this point when the market opens, right? This is the low, and this is the high, okay? And then these candles are like indecision candles, okay? Wicks, all right? These are called wicks, and when you see like the tails, these are the tails. That means that they're like the stock doesn't know what it wants to do. All right, and I would have been wary of this. I would have probably stood away from this, but then it takes a nice little sell-off, right? And it sells off, and it dips below all the moving indicators, right? You notice the MACD rolls over, which is all bearish signs to short. So this could have been a nice short. And, it went from like $7 all the way to $6, and then it kind of found its support here, and then it kind of bounced. So you could have actually bought the bounce, which is what a lot of people did. And they got a bounce here, and they bounced all the way up to 673, and then those people here took their profit. But what I really wanted you to really focus on was when would have been a good entry on this stock, right? Me, I would have stood away from this. I'm not touching this unless I see something like this. So let me move this back so you guys can see. Right here is high of day, right? And if you notice here, it's here. This is the high of day. If it breaks high of day, you put it. So what I would have done is right here, I would have put a trend line here, right there. I would have put a trend line there. And this is what I do in real time, guys. I would have put a trend line here to say, hey, you know what? If this stock at some point gets past this $8, what is this? High of day. This candle is 823 mark. I'm gonna place a buy order. And look, I'm gonna show you this is the 5-minute chart. I'm gonna show you a lot clearer. Actually, 832 was the high of day. My apologies. So, so if you look at here, this is I have no indicators on, just a clear chart. Some people just trade charts like this. They don't even use indicators, just to look for patterns. This right here would have been an entry for me. Once it broke this, I would have used this as my stop loss. And if you notice, it kind of it broke it. It kind of dipped below for a second, but then it gapped up, and it went from 832 all the way to 957. You could have made some nice money. And as soon as it reversed, you take your money. Don't get greedy. I mean, I probably would have, honestly, I would have probably sold right before it hit even $9, just because $9 I know is a psychological resistance barrier, and I might have just took my profit there. Depending on how many shares you could have bought, you could have made yourself a nice profit. On the 1 minute chart, it moves a little bit slower. You see how it's consolidating here and it's forming that bull flag. If you do this little thing here, you see the consolidation. This is called an ascending triangle. So you see it's kind of squeezing for a pop, and if it goes above this, then it's a breakout. If it goes below this, then it's a breakdown. And it popped, and you see you got this little gap up. People took their profit here. You got this little gap up, and then everybody took their profit here. So you see the look looks a little different depending on the time frame. Most people are trading on the 1 minute time frame because this is so volatile and it's moving so fast that people are taking their time, taking their profits quickly. That's why I like to trade on the 1 minute time frame, especially for stocks like this that are moving really, really quickly. All right, and remember, when I'm looking at this, I also have my time and sales tape here. I also have level 2 here, so I can see how many buyers are on the ask, or how many sellers, how many buyers are on the bid, or how many sellers are on the ask. All right, so that's what I'm looking for, those patterns, and that's what most traders do. They look for those same patterns and those are the entries that they get in. Let me just remove this and this. Okay, and let's look at a couple other charts just so you can see. Look, I'll show you. Here's a stock here. This stock was opened at 121. It closed for the day at 208. So it had a nice run. And look at this. Not a lot of volume here. But if you're watching this and you're looking for an entry, right here is this people's entry. I'm sorry. Right here is this is the first entry because this is the breakout pattern. This is the breakout. And if you're looking at it here, let me just zoom in. If you notice, right, this is the high of day at this point, so you just put a little trend line here, and that acts as resistance. And look, the MACD starts curling up. Look at the TTM squeeze line. This is an indicator that it's ready to squeeze up for a pop. And look at the MAC2D lines. They're separated, green over red, which is very, very bullish. And it rips. Now, there wasn't a lot of volume here, so not a lot of people pay attention to this, but once it broke, this was a confirmation for people, and they started buying the stock, and it started ripping up, okay? And it kind of ripped slowly all day, and then it peaked at 240, and then there's the sell-off. Now, me as a short seller, these are the kind of stocks I look for, because these are the ones that are very, very simple to short and make money, if the shares are available. When I see a slow grinder like this, I'm waiting for the reversal. So I'm just kind of watching it all day, and I'm waiting to hit its high of day. And once I see its high of day, and I see that MAC roll over, and this is all stepping down, I just short into this. And this could have been a nice short. If I probably would have got filled somewhere in the 230 range and just took this for a ride all the way down back to like 1 something. And this is what a lot of short sellers do. A lot of short sellers wait for the stock to have that reversal and short into the reversal. So that's what's you can take a lot of different strategies. You can buy on breakouts. You can short on breakdowns. On reversals. Once the stock gaps up, you can buy on dips. You can do lots of different things. Let me let's look at a couple. This is an ugly chart. Let's look at a couple. Look, this is another example of a chart that a lot of people look at, right? So stock opens, and look how clear. It looks a lot clearer here on the. Let me use the 5-minute chart because it looks so much clearer here on the 5-minute chart. But what happens is the stock opens, right? It consolidates, sells off, and then it starts gapping, right? Once it breaks this, so what happens is let's say you're watching the stock for whatever reason, you have some sort of bias, right? So you see it here. What you want to do is immediately you just want to put that little trend line there to see. And once it broke this was a confirmation. That's why you see the little. And if you see on the 1-minute chart, it's hard to see here, but this is the high of day right here, right? If you do your little trend, once it broke this, look what happened. The volume push came in. Why do you think it came in? Because people saw that it broke the high of day, and they took it for a quick scalp. And then those people that bought here took their profit. And then it kind of held it broke the 9 EMA, but it hit the 20. It bounced off the 20 EMA, and it just kind of rolled up. So then what happened? So you can see really clearly on the 5-minute chart, look what happened. This came the high of day, right? This is the sell-off. So what you do is, if you're going to keep watching this, you write a little trend line here, right? And you see that's resistance. This is the low. This is support. So you kind of watching. It's riding this channel. And once it breaks this, look what happens. Another little push came in. Rolled up, pulled back. People started taking their profit. And then look what happened. So this is that comes the high of day. People watched it. Once it broke this, it gapped up. People here took their profit. And then at this point, everybody takes their profit at the end, towards the end of the day. And you just shorted this. And I would have been looking to wait for the high of day for a reversal. And you know, people, the short sellers come in and they short this back down. These are profit takers and short sellers driving the stock back down. And that's why, me personally, I like shorting, because I think shorting is a lot safer. We're trying to figure out when the stock is going to go up. I'd rather bet against that it's going to go down. And once it has its high day, you know people are going to take their profit, and you just short into the reversal. The problem is finding you know, finding shorts that are available. So, you know, you put a short order in, but, you know, your brokerage may not have the shorts available for you to borrow. So that's one of the problems you have. And, you know, you need like a particular brokerage, day trader brokerage, to really find shorts for these like shitty low price stocks like Speed Trader or Centerpoint. And you need 30 grand to open an account with them. So that's the problem a lot of people have. When they want to become short sellers, they need the cash to do it. You need the cash for the accounts. So here's another couple of other accounts. Look, this is another one, ARWR, right? It looks ugly on the 1-minute chart, really ugly. Right? There's a lot of wicks, a lot of indecision. But if you noticed, right, once it broke this, that's high of day. It didn't really hold. Kind of then this became high of day right here. Then it kind of gapped up a little. People took their profit. But look what happened. Right here, it starts consolidating. And what happens? Once it breaks that 168 number, it took a while. And that's why people don't, you know, if you have the patience to watch it, this thing ripped. And if you know, what's going to happen is that this is going to pop up on your scanner anyway once it breaks the high of day. All right? And then people saw that, and they just rolled this up, okay, all the way to 197. Now, I would be looking at stock like this to short on Monday, because this is probably a company. Let's look at the 5-day chart, right? Over 5 days, this stock was at 179 5 days ago. It was down to 142, and it's kind of been like ripping up. But if you look at, let's say, I don't know, 180-day history, this is a stock based on, this is one of those biotech companies that had some shitty news and sold off. So there's no resist. If you look at the stock, there's no real resistance. This stock does have the ability to find its way back up. Will it? I don't know. Who knows? It's probably gonna pull back and sell off, and I would be looking to short this back down. But you know, you only know when the stock market opens. I mean, that's really the best way. When people ask me, what do you think the stock's gonna do? I don't know. Nobody knows. Anybody tells you they know, they're lying. Nobody really knows. You know, you just kind of take calculated guesses. That's really what it comes down to at the end of the day. You know, so, you know, just to give you guys all a heads up, if anybody's telling you they know what a stock is going to do, they're full of shit. Nobody really knows. Okay? Now, look, this is a stock that opened up, OXGI, on Friday, and kind of sold off, right, at the market open. And it sold off really nicely. These are bear flags. So if you see it come down here, you see that where it comes down here and it crosses, it holds its support and then breaks below. These are breakdowns. So remember when I talked about breakdowns? Breakdowns is when it breaks. So this is the low of the candle, right? This is the high. Once it breaks is support. That's a short sign. And if you notice, this thing kind of gapped down all the way down. It went all the way down to about 64 cents. And let me just get out of this. And then what happened? Once it found its support at 64 cents, this was an opportunity to dip buy. And you could have dip bought it all the way at 70. So if you watch stocks, and let's say that, I'm looking for stocks that are ripping at the open, but you see the opposite, you see a stock that's ripping down, and let's say you don't have the ability to short, because I know a lot of people in our group don't. What you could do is still watch the stock, because if it's like selling off crazy, I'm saying, hey, I'm going to wait to see where this stock finds its support level, and then I'm going to put a trend line there, and I'm going to see if it starts gapping up. And if I see it, and look what happened. It kind of found its support here, gapped up, people here took their profit from 65 to 60. This hit a high of 68, 3 cents, maybe some scalpers, and then it kind of sold off. But you notice that it really never dipped just for a second there, but it really kind of held its support here. So you're like, wait a minute, you know what? This thing might bounce. And look what it did. It wound up bouncing and it went from 65 cents all the way to 70 cents. Now that doesn't, oh, actually, I'm sorry, it went all the way to a high of 72 cents. Okay. So, a lot of people their strategy is just to look for stocks like this that sell off in the market and buy dips. So that could be a strategy all in itself. There are other broke people who look for stocks like Jibo that are ripping in the open and they want to buy on the way up. There are other people who look for stocks that trade reversals. So they look for stocks like this and they're like, hey, I don't care to buy when I'm waiting for that reversal so I can short into the reversal. And there's other people who short not stocks that spike up this quick, but wait to look for stocks that are like more like this, where it's like a. Let me show you, like the one I showed you earlier. Where is it? Let me see. Stocks more like this, where they slowly grind up, where by here, but they find their high and they short into the reversal. They do a slow grind, and then they kind of short into. That's the ones I like. Those are the safest plays. You got, and I like to look for the stocks that like nobody's, a lot of times to short into the stocks that nobody's really care looking at. Sometimes I'll find a stock that's just on my two cap can't. Let me see if I pull it up. My two candle gap scanner, like a stock like, oh, this is a red to green to red play that I had. Let me see. I'll look for a stock like, oh, look at this one. This is another dip buy. Where is it? Dang it. Let's go here. Look, this stock actually had. Look what it did. It sold off. It found its support. You could have bought the dip and rode it all the way back up. I mean, these are the same patterns, guys, that people trade over and over again. A stock like this, look, look what it opened. It found its support here, and once it broke this, look, it ripped, and then this is I would short. So these are the kind of stocks I love to short, where they kind of like grind up slowly, and you see how this is like the market opens, and from like 9 to like 12, almost 11, a little after 11, nothing's happening, and then they just kind of ride up, and then all the way by about almost 12, it finds its high, and then you just short into the sell-off. I like shorting into stocks like that. I'm trying to look for something a little more realistic. Can't find anything right now. I'm just looking at charts. See, I don't see anything, unfortunately. No, this is a stock moving that ripped all day. Look at that. Nice. Let's see. Look at this. Look at this. This is a stock that in the open ESTY ran. Okay, and this is what I would have done. So this is a stock that I like to kind of short. So it slowly grinds up, and you see people are buying, and it's riding the 9 EMA, which is all good. You see the MAC 2D lines ripping up. You see the TTM squeeze, and it's just a nice slow grinder, right? At this point, about this time, this is where, and I want to see right around, what time was this? 12. Right around here, this was the high of day, and if I was watching this, and I would have shorted into this sell-off here. And these are the stocks that I like, because they're slow, easy reversals to sell off into, and they're just such easy money, man. It's just, it's not a lot of stress like watching a stock and buying and like watching it go up and like, oh my god, when should I take my profit? When you short it, it's just so much simpler. You just wait till the stock finds its highest day. As soon as you see that reversal and you notice the MAC 2D stepping down, you see it's breaking across the 9 EMA, and you see the lines, you see it all stepping down. This is all bearish signs, and you just short into this. And it doesn't seem like much. This is a higher price stock. I mean, but it goes from 12.96 all the way down to about 12.81, and then it continues to go down all the way to 12.76 before it has it goes down all the way to 12.70 before it finds its sort of support level right here. And you could have put a trend line here and just kind of watched it and bought the dip. You say, oh, wait a minute, it's not breaking below this, and you could have just rolled it back up, and you could have rolled it back up to $13. So this is what people do. They look for these. Now, this would have been considered a dip buy, okay? And then and then some people, they're not that comfortable. They look for the high of day and they're like, hey, if it breaks high of day, this is my entry. So right here, 13 bucks could have been an entry because this was the high day at this point, and you ride it up and you just sell into the sell-off and you take your profit. Now, it could be a lot, it could be a little, depending on how many shares you buy. But the key, especially if you're a beginner, is to be green. You just want to make money, and just it builds your confidence up, and you just want to be real careful about about holding and hoping. You don't want to do that. Stocks going against you. I usually like to say, depending on how many shares I'm buying, um, I kind of make a determination. Like I don't want to lose more than $100 or $200 or $300. I don't really worry about percentage. Some people do. I'm more about, all right, if the stock dips below 200, I'm out. Or that's sort of how I do it. Everybody has their own way of doing it. All right. So that's kind of what I wanted to talk to you about. Just so you know, let me go to my stocks to trade account. These are the stocks that I looked for Monday, and the reason why I picked these is because most of these stocks held their highs. If you notice, this kind of sold off a little bit, but it kind of got back up. It's holding their high. This is my stocks to trade account, and if you notice, this is a stock that opened here. It's an ugly chart, but let me look at it. These are stocks that you see gapped up, they consolidated, but then they kind of had a second run and they sort of held their highs. So what I do is I look for stocks that are holding their highs because my assumption is they're going to be in play the next day. And if I go and I look, and the way I find, there's a few ways to do it, right? So I showed everyone how to find, how I find my plays. So, I have this big moves, this nightly scan, and the criteria I look for is between stocks between 20 cents and $30 that have 500,000 shares that are up 5% or higher. And then I hit scan. Now that same scan, you can put it here on the right on your Thinkorswim account. And then what you do is when you go to charts, you just literally click through all the charts. And what I do is I look for charts that are holding their highs. So, like for example, ETRM held its highs. Guess what? That's going to go on my watch list. And TFM sort of held its high. I don't know. This thing kind of broke down. This may be a potential short, but I don't know. I'm looking. Did this hold its highs? No. So this wouldn't be on my watch list. This kind of went up, and look at this. This is the kind of stock I love to short. Where this is the kind of stock I was looking for earlier, where it grinds slowly. This is a nice buy. But what I like to do is look for the high, and then when that short into that sell-off, would have been a nice short. These are simple plays once you see them. Let's see what other stocks here are holding this. So far, ETRM is one that held its highs, and I need volume too. So ATOS, it only sold through 600,000 shares. It's not liquid, but I may just watch it just because it kind of held its high. It's close to the high of day. So it would probably went on my watch list just to see what it's going to do Monday. May do nothing. This is nothing I'm going to do. This stock, even though the chart looks ugly, I would put it on my watch list because it kind of held its high. And if you want, you can just, to get a nicer, cleaner look, you can just put like the 5-minute candle. 5-minute chart. It gives you a cleaner look. And you see it sort of held its high. So this would go on my watch list. Okay? IKNG, I don't like it. This chart, sort of held its highs. This is going on my watch list. They didn't have no volume though, but I would still put it on there just to keep an eye on it. Maybe it might do something. Okay, PIOP, ugly, no volume. BCI, yes, this would go on my watch list. Why? Because it gapped up and it held its highs. All right, closed into a high into the close. All right, and what I'm doing is BIOS. This thing ripped and sold off, and it kind of consolidated. I might watch it just to see. And you just kind of look at this, and based on these, this is a stock, BPEPQ. Look, it had sold 2 million shares. This is a former runner too, and it held its highs. All right, this is a pump, a blatant pump. I would put this on my watch list. All right, so you just kind of look. ARTX, another stock, went from 420 to 470, held its high, so it would go on my watch list. So I don't know if the stock is gonna continue to go up or down. My assumption is by putting stocks that hold their highs on their watch list is that sometimes they have a continue to run at the open, but you just want to see stocks that are volatile so that if you're long or short, you can make a play. you know. And you gotta get a sense of what a stock is gonna do by looking at the yearly chart. So if I look at the yearly chart, for example, for a stock like this stock was trading a dollar 92, all right, back in January of 2016, all right, and this thing has been ripping all year. It's hit a high of 412, okay, that was its previous high, and then look what happened. It sold off. It went back all the way back in May of 2016, back to 263, and it's kind of been running sideways, and then it kind of went up to like 350, and then back down to 223, and now it's been ripping, right? And then if you notice, it's kind of slowly been ripping, okay, all the way up to, got up to about 426, and then kind of consolidated back to 333, and now in these last 5 days, it was at 358, 350, 349, and now it's had 3 green days. So what do I expect? I expect this chart to sell off, okay? So I would be looking to short this, and what I would look for is to see the previous. This is what you do. Here's a trick if you want to be a short seller, okay? It's a stock that sold over a million shares, so I would pay attention to it. And what I would do is this. Let me go back to the daily chart, right? The close price was 470. What I would do is I would put a trend line at 470, right? For tomorrow, I would put a trend line at 470, and if it dips below 470, if it dips below the 470 price, then that's a short sale sign. That's a sign to short the stock. And I'll let me open up my stock to trade ARTX. So this was Friday's close price. But Monday, I would be looking to see this trend line should be here. And if it dips below that close price, then that's a sign to short the stock. That's called a green to red move. It's when the stock dips below the previous day's close price. And these are the stocks that I have on my watch list for tomorrow that I made for you guys. All right. So that's kind of what I wanted to talk to you guys about. If you have any questions about this stock or any of the trades that I've been talking about, let me know. I know this is kind of complicated, it takes time to learn, but basically keep it simple. Buy breakouts, buy dip buys, short breakdowns, short stocks that go from green to red, short stocks that go don't hold their high. So once they find their high and they go, you get that little reversal. Okay, like here's the high and here's the reversal. You short into the reversal. That's what a lot of short sellers do. It's very simple play. Okay, but you want stocks more. This is a perfect chart. Like this is the kind of stock that I love to watch and short into. It's finding its highs. You see the reversal, and it's just a nice sell-off. Okay, beautiful way to short. All right. So I hope you found this helpful. I know this probably went longer than what you anticipated. If you have any questions, hit me up. All right, folks. Have a good one. Go Giants.